With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. Welcome to the COB. I'm Nadine Blaney.
And I'm Juliette Siley. Nice to see you.
Yeah, really good to be back here with you. Look, another day, another dollar for this local market, up by about 0.5%. So clearing that 8,000 level yesterday and going beyond it today, Juliette.
Yes, indeed. In fact, we hit 8,100 points very early on in the session. Let's have a look at where we are there on the SIBO. 1,551 points, up 0.5%. And on the ASX 200, we have closed shy of that. No, in fact, it looks like we've just got back over it on the close. 81.08 is where we sit, up by about 0.5%. New 20-day high. And of course, a fourth session in a row as we see this market acceleration continue.
Look, I don't want to rain on our parade as it is outside in Sydney. It's a miserable day outside the office here at Barangaroo. However, we are watching E-minis come under a bit of pressure today. Looks like the S&P 500 E-minis are down by about 0.5%. We've got some big tech earnings still to come this week. And as well, today marks 100 days of Donald Trump.
Indeed, and we're going to get the US GDP print too, so potentially a little bit of, there we go, uncertainty ahead of that. Always got to squeeze in to get this board across here, but we are at a 2-month high on the market. And of course, we had the inflation data out today, and importantly, the trimmed mean below 3%, the annual rate for the first time since 2021. So really just giving that clarity of a May rate cut.
I was just reading a note coming from Paul Bloxham, who's the chief economist here for HSBC, and he was saying, look, that alone probably not enough, but given what the RBA has said about the global economic uncertainties, likely enough to tip the balance in favor of an interest rate cut coming. That's May 20th.
Yeah, and when you talk about the uncertainty, we did have some more news on China contracting as well today. So the tariff affects kind of the first look here for China's factory activity, the worst contraction since December 2023. So prompting calls, of course, for more of a policy injection from Chinese authorities.
Yeah, we've been waiting and watching, and so that watch continues. But yeah, it's really interesting to read a lot of the rhetoric that's coming out about the impact that these tariffs are already having in places like the Port of LA, for example, already seeing more berths being left empty than at the height of COVID. And that, of course, has this butterfly effect across transport workers, port workers, all the rest of it, many of whom form the base of Donald Trump. And also, think about the exports from the U.S. as well. They're way down. Soybeans, a huge export industry to China. And, you'd think that Donald Trump at some point would want to shore up his favorability amongst some of those groups. I'm just talking about this. I was at an AmCham event this afternoon, really, really worthwhile, with April Palmerly, who's the CEO there, as well as the CEO, Mike Green, of the United States Study Center. I wish I could play it all for you. There was some really interesting insights. But the big question is, he says that these Mike Green says these economic overtures are unsustainable and that things will change because his popularity is down.
It will be interesting, as you say, on the 100 days he is going to his base, isn't he? Whether or not he's still going to get the fanfare he had pre-election. Let's have a quick look though back at our market at a 2-month high in terms of some of these consumer discretionary players, all looking pretty good. Consumer staples is kind of where it's at though too, after we had an update from Coles today, down 0.8%.
Endeavour Group, we reported yesterday, has that new CEO, so the uptick from that didn't last long. And we've had a bit of news out from the energy space. We'll get to that in just a moment, following on from the final investment decision being made by Woodside. Woodside, speaking of, up by about 0.5%. So a new gas supply agreement with BP. So big end of town for that Louisiana LNG project.
Yeah, and a lot of quarterly updates today as well. Let's have a look at some of those in terms of, we also heard from Origin reporting a fall in liquefied natural gas pushed by lower volumes and prices.
Yep, IGO reiterating production and cost guidance. And Northern Star Resources fell, yesterday, really getting hammered and continuing today.
Westpac, meanwhile, warning its first half net profit will be reduced by $140 million. Now, this is due to reporting changes from APRA, also some hedging there as well.
We've got Star's quarterly loss widening, dwindling visitor numbers, and the closure of its Queensland casinos because of Cyclone Alfred.
Absolutely. Stockland, meanwhile, saying market conditions are uncertain. It did flag its guidance can be subject to change. And Cedar Woods Properties having a good day on a positive full year 25 forecast.
Yeah, I was just chatting with the newsroom saying that, particularly for a lot of these companies in the very small end of the market, we're getting quarterlies later on in the afternoon. So apart from the production quarterlies, just coming to mind, Ava Risk Group, sales order intakes for the quarter at $6.5 million. So still some news being generated in the latter part of this session. Also, just noticing the Aussie dollar up at 64.17 as we speak.
Absolutely. Gosh, it is continuing to rebound from those Liberation Day woes. Let's talk about all the market action. Mark Gardner from MPC Markets joining us. 100 days of Trump feels like longer.
100 days of chaos. And I'm frightened to think what the next 100 days brings, to be honest, because it's kind of felt like a year just about so far. A lot's happened. We went through a bit of a review of the first 100 days, actually in the office today with the investment committee, and it took a long time. There has been announcement after announcement after announcement, and just weeding through and actually seeing it in context, because he's very good at distracting, from an issue and then just basically starting another issue. But it was sort of good to see it all laid out bare, because there's been a lot of announcements that have disappeared or unwound, etc. I did watch the rally this morning in Michigan, which was more of a WrestleMania style atmosphere than a presidential rally. To be honest, the crowd was very vocal. There was definitely not a fact checker there, that's for sure. But started the rally by unwinding his own auto tariffs, and claiming a win. So I don't see this ending anytime soon, but I think the supply chain issues, which you sort of touched on a little bit earlier, there's empty ports in LA, and there's satellite imagery overnight where basically there's just ships in China just stuck in port. We're going to start seeing shortages of certain goods in the US, and I think the media will probably jump on that pretty quickly. And then obviously I think wheat prices are at multi-year lows, etc., soybeans as well. So
what do we care as an Australian investor? Because we are seeing a bit of a calming of these trade tensions, and gold has been having a pretty rough ride lately. So what's your view? Northern Star, I think the reason it's been hit a couple of days in a row is they're actually quite heavily hedged at $4,000. So whereas we've been in Newmont, we did take some off over the course of the last couple of weeks. But they're one of the only big gold miners in the world that's completely unhedged. It's been their company policy since 2007. I think there'll still be a drift back to gold at some stage, because we still haven't addressed the US deficit, and I can't imagine that Trump's just going to go quiet and be very reasonable from here. So I think there'll be that risk off premium come back into the market at some stage. I think it'll be via the economic numbers, though. I think payrolls this month might be okay, but we've got Doge job cuts coming through. Definitely in probably June's numbers, inflation's going to start to kick through, but from the tariffs as well, because they have been in place, and obviously supply shortages are going to push inflation up as well. So, I think it'll be more concerns around the economy and the damage is done to business confidence. That consumer confidence number last night was the worst forward reading since 2011, and we were coming out of the GFC. So, and I think that there was the worst reading since the depths of COVID. So, those leading indicators do tend to, trickle on to, where businesses are at. But so we're probably looking at the earnings tonight. I think Meta and Microsoft will do fairly well because they're not really a lot to do with tariffs, but we'll probably be looking to, reduce our exposure tomorrow, I'd say, leading into Apple earnings, which could be of great concern, and then obviously payrolls on Friday night.
So that's your US, I guess, global allocation. What about locally? What are you sort of staying away from?
We bought high quality names, Westpac, Goodman's, Macquarie, etc. most of those have bounced about 10 to 12% overall. CSL's now starting to kick up a little bit, but we'll just review. It'll probably be some lagging names which, that have recovered over the course of which we might just go back to cash, and I think cash is still a pretty valuable thing to have just in case we do turn down again. But yeah, we'll just be a little bit more on the sell side. These bounces, similar to 2022, it's around about 15%. We're about 3 to 4% to go before we repeat that pattern, and then from that point, I'm a little bit wait and see.
So this 8,000 level, I mean, I know it's early in the season to be asking this, but I've been speaking with a few people who reckon that we could sort of end the year at around this level for the index, given all of the water that's to go under the bridge.
I'm more bullish than that. I'll stick to my call from the last call back in December. I think we'll end up a few percent from where we were in December last year, but by way of down 20%. And we've already done that so far. I think but this pattern from 2022 is very much playing out, and almost the timing's eerily similar. But I think what people are underestimating with the Aussie index is the banks have pulled back. We're around about 8,000, but those resources stocks are still extraordinarily cheap, and I still see some decent gains in the back half of the year. I think China's stimulus is really going to help that half of the market. And I don't think the bank's going to go too far. Our tech sector is already been hit pretty hard. So I think we will outperform the US potentially, which is I know that's almost a crazy thing to say, but I think there's going to be a return of real assets overall, and we have a lot of real assets in our index. So the likes, I think with copper particularly, there's starting to be shortages in China. The smelters are actually paying premiums away, which they haven't done in 10 years to secure forward supplies. So, and China's going to stimulate to get 5%. So I think we're in a pretty good spot. It'll just be scary for the next few months, but it'll be mainly tech. It'll be mainly those Mag 7, I think, as countries look to, some of the sovereign wealth funds are starting to get a little bit worried about their exposure. I think that was even
Germany said that it would be looking to reduce its exposure to US treasuries, which is
incredible. But I mean, the thing is, we haven't been forced to look anywhere else for like 2 years, but there is a lot of Novo Nordisk is down 60 to 70%. And trading at really reasonable valuations. The raft of Chinese tech companies or Hong Kong-based tech companies and even Singaporean tech companies as well. There's a lot of value out there outside the US, so it's just forced people to look.
That's what I wanted to ask you more broadly about some of these Asia tech names. I mean, I think Sony as well coming out with an update today about diversification and further chips. Is this another example of some of these big tech behemoths in Asia just taking the lead from the US potentially?
Well, it is. I mean, it's a national security concern, so it's not just chips for AI. I don't see that thematic necessarily going away, the AI thematic, but people have obviously, they need to have that semiconductor manufacturing capability. Because it pretty much is the engine of just about everything we use, down to your electric toothbrush.
Yeah.
And look, TSMC is not going to give that away anytime soon because they've got a fairly aggressive neighbour next door that thinks that they still belong to them. How that plays out, but being the leader in semiconductors for the last 40 years has actually been been very high on the list of strategic. Defence priorities. So I don't see that changing anytime soon, because if you lose that race in AI, you can be behind in a lot of different areas very quickly.
Yeah. All right, Mark, thank you. We know that we're using a lot of your time this week. We really appreciate it. Thank you, Mark Gardner from MPC Markets.
You mentioned consumer staples, Coles out with its sales update. That was the stock of the day on the call. Henry Jennings from Marcus Today and Andrew Whiteland from DP Wealth Advisory.
Have been defensive, and they have been big names. They have been a place for people to hide out in. The results from Coles were okay, not particularly brilliant. Liquor did underperform some of the expectations in the market, but it does appear that Q4 has started well. I was quite impressed with the e-commerce sales growth, especially in the supermarkets, 25.7% higher there. And, everything's going okay. The fulfillment centres are being, upgraded. That ramp up of Kemps Creek is really doing well. So, it's not a bad environment for Coles.
Look, certainly fully priced at these levels. Consensus is about $21. I agree with Henry. The result was okay. That the e-commerce piece in particular, about 25% growth from memory, has been going on there. And it was a 3% increase in sales, which doesn't sound that great, but it was off a pretty strong third quarter last time. So that's certainly a positive for them. And to Henry's astute point relating to being a political football.
All right, let's have a look at the leaders and laggards in a session of gains. PEXA there up by 5.5%.
Yeah, had a bit of news from PEXA this morning. So it has received approval from the UK's Financial Conduct Authority. So it's planning its product launch in the December half. So they'll be able to continue to develop the sale of this purchase product. So pretty good news for PEXA. It's been a long time in coming.
Absolutely. Let's have a look at the laggards in the session today, including quite a bit of weakness in some lithium players. Liontown down by almost 7%. Amcor off by 3.6%.
All right, let's take a look at the small to mid-cap space. And Hancock & Gore, the fund manager, up by 11%. Orthocelis, company I've had my eye on since we spoke with its chair last week. It's got approval in Canada for its main product. Tyro also looking good today.
And in the lagging space of the of the small end of town today, Microbial Life Sciences?
Microbial
Life Sciences down 24%. Imugene was down by almost 10%.
We're going to have to get the gremlins on fixing that one, I think. Look, when we look ahead to what's coming through tonight, we have in Germany first, we have unemployment. We have CPI as well coming out in Germany, as well as GDP. And in the United States, GDP for the first quarter expected to be flat. The employment cost index should rise about 0.9%. And we are also getting the PCE deflator for April released as well.
All right, tomorrow looking ahead at the goods trade balance for March, $2.8 billion surplus expected. CoreLogic Home Value Index as well for April. We're getting a quarterly update from Woolies the day after Coles, and Rio holding its AGM.
Yeah, I wonder if they coordinate that, because it's always such an easy way to compare and contrast and find the holes in whoever happens to be coming second. But yeah, at least we'll have some corporate news to talk about tomorrow. Who knows what will come? I mean, Donald Trump did do his 100-day speech. I haven't had a chance to listen to it. It's been pretty busy today, but he's already easing some of those tariffs on autos. And of course, we had the new Canadian Prime Minister, Mark Carney, making his first phone call to a world leader, to Emmanuel Macron in France.
Yeah, absolutely. What an incredible turnaround from a few months ago. All right, let's have a look at where the local market is. Closing up 0.5% there on the COB 200, the ASX 200 at a new 20-day high, and in fact a 2-month high, up 0.7% on the close, so firmly above 8,100 points. 8,126 is where we finish, I should say. PEXA, of course, as we mentioned, the leader today in the session.
All right, look, we hope you stay dry and warm wherever you may be across this great country, and we look forward to seeing you tomorrow from 9:45.
See you then.